Hello and welcome to the Bullish Bears YouTube channel. I'm Jeremy and I've got to get started with some pretty thankful vibes, I guess I could just say. Thank you very kindly for helping us get over one of our hurdles with the YouTube algorithm with all the likes and support that we've been getting. We finally kind of pushed over a hurdle, and our next step is to get over 100,000 subscribers, and we really love you all. Thank you so much for the support. Getting that out of the way, let's get to the good stuff. So I am kind of in every aspect of the market, and I day trade, I swing trade, I long-term trade. Some of my investments I've had for years and will continue to have for many more years. I get it. This pressure from all of these analysts out there is probably driving you nuts. All these little chicken little type, clucking their heads off about the sky falling or something. It really gets under your skin. And as a trader, I can tell you the most important rule to stay alive in any market condition, not just, is the sky falling type of stuff. I'm talking anywhere, is to absolutely avoid any emotional response to anything. Do not give an inch and just stay mechanical, stay very focused on whether it's fundamental analysis or technical analysis. Whatever your alpha is that you make for yourself, and you're still here trading because you're doing good at it, or you're still investing because you hold positions in companies that you believe in, stick to that. Stick to what you know. Don't go listening to all these analysts out there just absolutely saying that the sky is falling. Is the market going to crash? Well, to find a crash, let's have a look left, guys. Monthly chart, you can't deny this. I mean, yeah, we're a bit parabolic, if anything. And if you followed any of my material, you know I love to point out measured moves. Here's your primary, there's your consolidation, there's your secondary, if you will. This was a drastic event that caused this pullback. Let's go back to a weekly chart. So you get the idea. So looking left here, you see primary, secondary, pullback, and it gave about half back. Imagine that. I write this down on a post-it note, and I tell everyone else to do the same. Half and whole. Stick it to the edge of your monitor, and you know exactly why when you've watched some of my material. So primary move, yes, it's going to give back. And typically any impulsive move in the market on every time frame is going to do the same. So you get half back right to the wick here. Boing, right off that sucker, trend up. Another leg here, half back, trend up. Okay, this one didn't give half back. Gave us a 2-for-1 and then gave half of the second leg back. All right, you get the idea. Impulsive moves usually give about half back. Well, what do we have here? Yes, we have a little bit more if you include this way down here bar and this whole move here. This wick would be a little bit under half back. Notice how long that is. There were liquidity there. Lots of buyers found their way in the market here. Why? Because they know this rule. They know that things tend to kind of digest for a little while, if you will. They got to pull back a bit. They got to give something back. And then usually if things are good, these support levels get tested, and then new price discovery gets probed, and things go higher eventually. That's just how the market works. So look a little closer and you'll see the daily chart. We got the same kind of scenario. At first we were trading this leg here, and it was essentially half of this trend back. If you count the whole thing, as choppy as that is, there's some volatility here. We changed presidents, and now we've got everybody blaming Trump for crashing the market. He doesn't care about the market, y'all. The market cares about the market. The market doesn't really care who sits in the big chair in the big house. It doesn't matter. No one cares. The market does its own thing. Yes, there are some things a sitting president can do to change market conditions somewhat. Of course, they're going to have effects on it. But you really don't have to really beat yourself up about it. Don't fall for the trap. Don't take the bait. Don't get emotionally involved in this stuff. Just trade methodically. Look at what this really is. It's just a pullback. Take this whole part of the trend here. Yeah, we're about half right here. We dipped a little bit lower. Can this break lower? Well, sure. We've got all this to eat up. We can get it. All right. It can go back even further. We can say, S&P around 5,200 is pretty reasonable for a pullback. Okay, so let's dig in a little bit tighter here. And this is near-term stuff. I always look at the 2-hour chart for this. Boy, TradingView's being slow all of a sudden. Anyway, you can see we've got primary pullback. We get relief rallies in at least this bearish portion of the market, which is stemming realistically okay about February till, a couple weeks ago, last week, whatever. Point is, it found a low. We got a rally. We came back, tested half. Again, half and hold. Just write that down, guys. Leg, half back, come back to the high. We tested it. It was so nice. Well, we tested it twice. I know that our community, our subscribers inside the community, were probably pretty impressed at how I was able to take a rally that happened the other day and plot targets on it, day trading the FOMC event. And realistically, it's just finding those returns to mean the half back, the impulsive moves. You get the primary, secondary, measured move. You get the idea. Okay, so trend, half back, trend. Testing the top, we did probe price a little bit here. We had some price discovery after the previous high. Today was a great day trade. We dropped right off a cliff, gave back half of this trend, ripped it right back up. Ask my members, we ripped this up this morning. We traded that entire thing right to 11 and we were done for the day and happy and fat. Trust me, we did good. So coming back here, testing half again. But what do we see? Consolidation, and things are getting narrower and narrower. And don't forget, April 2nd, we have tariffs going into effect, so we will have some more things happening to the market. So be aware that there is impending volatility. Things can change in the drop of a hat. We're consolidated in an area where this can go either way. We can go bearish. This can be just quick liquidity grabs and being sold to us. Those tall wicks would kind of suggest that. And we could go and test this low. If we hold again, cool. We know what a double bottom reversal looks like. Go bulls. If it breaks that low, look left. We got targets here. So when everybody else is clucking about the sky falling, be smart. Trade the chart. There's really nothing else to it. If you're going to be a long-term investor, sit patiently. Maybe you take some profit off and sit patiently, pull a Warren Buffett, sit on a pile of cash, get that 4% APY from Robinhood, whatever investor brokerage you're in. They pay pretty nice returns on, or nice interest on part cash. Cash is a position. And if things go right and inflation slows, well, it'll hold value too. So sit tight if you're an investor. We could see some volatility further. We can definitely see things playing out till at least April 2nd. And either we're going to find some great opportunities to grab some stuff. Keep an eye on Warren Buffett, by the way. Or we're going to sit tight some more and wait for the rest of this to go. In the meantime, us traders, day traders, and even swing traders are going to be killing it in this market. So let us have it. We're good with it. When it's done, we'll hand it back to you. You take the reins. That's how this works. In the meantime, thanks again, and we appreciate your support once again. Also, just be careful in this market. It's going to be a little bit rough, but I think there's going to be some opportunity in the near future that is going to impress even us. So thanks again. We'll see you again.